Welcome to the I Love Recruiting podcast with your host, Adam Roach.
Welcome back, everybody, to the I Love Recruiting podcast. I am your host, Adam Roach, and tonight I have Mr. Eric Forney coming to us live from Indianapolis, Indiana. He is one of the top, actually, I think you are the top agent in the entire state, aren't you?
For Keller Williams, yeah.
For Keller Williams, gotcha.
Yep.
So this guy, not only does he know his real estate knowledge, tonight we're going to talk to you because this podcast is actually going to drop tomorrow morning at 5 a.m. So it's our intention tonight to talk to you as business owners. We want to talk to the small business owners. We want to talk to business owners. We want to talk to independent contractors about these loans that are out there right now. These SBA loans, the 7As, the PPP grants, the EIDL. And Eric is extremely knowledgeable in this space. And so I brought him on to speak to all of us. So Eric, welcome to the show, my friend. Tell us about yourself real quick.
Yeah, thanks. So got into real estate 6 years ago. I'm somebody who's just obsessive, sometimes to a fault, obsessive around focus and growth. And so I got really involved in learning real estate, and that kind of fueled my growth of like you said, becoming the number one KW agent within my first 4 years in real estate. And so that worked out obviously really well. And then it kind of parlays into understanding what this CARES Act looked like is I look at this as the opportunity for me to be a thought leader and to save a lot of people from a lot of despair by understanding what it looks like and by positioning both my own business and other agents' businesses in an advantageous way for them first to survive, and then can they retool and restructure in order to survive and then thrive. So I've kind of taken on that task for myself to understand this.
Yeah, and that's a good line there. Survive and thrive. And so listeners, tonight, we have an I Love Recruiting podcast equation, and that is recruiting equals influence equals leadership. And it's our intention and job tonight that we are going to recruit you, to influence you, to go check out what we share with you. And then at the end of the day, we hope that your leadership skill set can then go pay this forward and go help other people too. So Eric, let's dive right into it. So whether that's any of these, let's just dive into the 7A.
Yeah.
What do we know about that?
Yeah. So you kind of touched on it. So there's three different offerings that kind of all roll together. And so the SBA 7A loan is a designation that is typically associated with a disaster relief loan, and that's administered through the Small Business Administration. And so in this particular instance, the SBA 7A loan, as it pertains to the CARES Act that was released just last week, it can be up to a 30-year term at 3.75% interest, and it's a $2 million up to $2 million line of credit, essentially, or a loan, however you look at it, and that is to be repaid, and it's to really offset any damages that someone may have suffered either directly or indirectly by way of the coronavirus and kind of the corresponding cascade effect of shutdowns. So that money you pay back up to $2 million.
Gotcha. So who is that for?
Yeah. Well, it's technically small business, and there was some bickering initially when that was pushed out to the House as to like what was the definition of small business. What they finally decided on was that's any business with less than 500 employees. And I think that from a semantic standpoint, that's important because it's hard to define 500 employees as small business. And because of that, it's imperative that those who are actually small businesses expedite their application process. Because when you open up the ability for much larger businesses to utilize resources, you have a much bigger drain on those resources. And so, they're saying that there's some thought that the funds for this entire relief plan will be exhausted within 30 days, if not sooner.
Right.
I know I tried to jump on calls earlier today with Chase because that's who I'm expecting will administer my application, because that's just where we happen to have our loan for the businesses, or our accounts with the business, and their webinars were overbooked.
Right.
Or couldn't even jump on it. I'm like, it's Chase Bank.
It's
How
huge.
did you not anticipate this, right? So that's how much demand there is right now.
Yeah, same with Wells Fargo. I went on the Wells Fargo's site, and this is not a knock against Wells Fargo. It just is what it is. They said, yeah, no, we won't have information or a link available, and we don't know when we will have it available, right?
Yeah.
So it's like, okay, fine. All right, so we know here that the SBA 7A is a disaster relief loan, right? Let's make sure that we clarify that this is an actual loan.
Yeah.
Right. So this isn't part that's going to be a grant that will be forgiven. This part is the loan.
Correct. And I think that you also look at it and that might be a good thing.
Mm-hmm. Sure.
You know, it's like getting a secondary mortgage almost on your business at today's interest rates. What we know in past studies of economies is that, you know, when you see helicopter money like this, you see taxation follow.
Right.
And so with taxation comes basically the ability almost to marginalize your gain on borrowed money. So for some business owners who are still highly liquid right now, the SBA loan is a really good opportunity to reposition your business to take, I don't want to say take advantage, but kind of take advantage of potentially some businesses that may not be as soluble as some business owners are right now, especially if they can get that loan.
Yeah, exactly. I'm glad you said that. I have some coaching clients that, I'm going to use this word loosely, but ego-wise said, no, I would never take a handout. What would you say to someone that says that right now? Because I'm sure there's some listeners out there that says, I have enough powder on the side. I'm okay. What would you say to them?
Yeah, and so do I. And what I keep telling people is this is like when you were in college and you applied for grants and you applied to go to different schools. You probably applied for student loans, and it's like getting awarded a Pell Grant and saying, "Nah, I'm just going to go ahead and pay student loan debt instead." Like you're dumb, and I mean that in the nicest way. You're letting your ego get in the way of the long-term viability of your business, because we just don't know how much solubility you're going to need right now. And is your pride worth you turning down the ability to protect your family and your business partners or people, merely so that you can protect your identity? Listen, if you're so prideful about the money, donate it later, or return it.
Right.
But don't have the ability, like I said this earlier today, this is like being on the Titanic and thinking about whether or not now is the time to go after a lifeboat. Like, the lifeboats are only there while they last, and those who waited went down with the ship.
Yep, they did. Yeah, so all those listening right now, and I hope that my client who said that, which I will not name names, is listening to this tomorrow. Get off the Titanic, right?
Yeah.
Get off that Titanic, get on a lifeboat, because it's there for a reason, right? Okay, so let's shift gears. So that's the SBA 7A. Now, if anybody wants to apply for one of those, where should they go?
Oh gosh, that's part of the challenge is all of this rolled out so quickly, and a number of the systemic processes involved with it are currently either halfway available or not available. However, I would go directly to the SBA website. If you just, of course, Google SBA, that'll pull up. And so I would go directly to the SBA website to apply for that, or at least be directed to whom administers those in your market.
Right. And then what you're going to have to fill out there is you're going to need your corporate name, right?
Yeah.
You're going to need your EIN number. You're going to need what type of corporation you are, an S Corp, a C Corp, a sole proprietorship, so on and so forth. You're going to have to know some of your numbers too, right?
Yeah. Yeah. So it really depends on how you're structuring everything that you're asking for and the dollar amount that you're requesting. One of the particular loans, I haven't dug in much to the 7A loan, kind of like I have the PPP and the EIDL loan, but but this 7A is going to want typically your gross revenue, your gross
Right.
operating expenses,
Cost
and
of sales.
yeah, yeah.
Mm-hmm.
And what's interesting is it's predicated on your ability to affirm that you've been either directly or indirectly affected. So who
Right.
hasn't indirectly been affected is what I'd love to know.
Right. Yeah. The dominoes have been massive with
Yeah.
this. Okay. So that's what they can do. And then also while you're going through that, there is a checkbox that says, would you like an immediate $10,000?
Yeah.
Right. Yep.
Yeah.
And you can check that checkbox, and assuming that all things go through, that does hit your bank account usually relatively pretty quick.
Yeah, they're saying 3 days, and that's the EIDL portion of this particular product is
Right.
um, that you get this like almost immediate injection of $10,000, which is fascinating, just in the sense that like what kind of position are you in right now where immediately someone's barking down your door for $10,000 given the climate we're in, but nonetheless, what is really fascinating to me and what tells me like whatever you're doing, you should, regardless of the position you're in and the structure that you're in, from a business perspective, you should definitely research that $10,000 EIDL portion that comes within 3 days. And I say that because um, from all the initial reports is even if you're denied the 7A loan, you still get $10,000 in an EIDL 3-day drop.
Right.
So I look at it and go, then who doesn't get it if they apply for it?
Right. Yeah. Now, I've been told too that if you have an EIN number, and now again, I don't know this to be true, so I'm just sharing what I've heard. That if you have an EIN number and that has generated some sales or it has income that is coming through, even if it's a pass through, right, or a holding corp, that you still get in there and call it a sole proprietorship.
That's right.
Right. Call it a sole proprietorship, and that $10,000 still comes to you.
Yeah, of course. Yeah, I mean, I think there's a number of different variations of how you could file for these potential grant dollars,
Mm-hmm.
and my disclaimer would be that's between you and your conscience and you and the way you interpret the content. My belief is that the intent of the bill itself is to stimulate GDP.
Correct.
It is not to regulate the bill. It is to stimulate GDP. So you not going out and taking initiative to apply for these things that you may be eligible for because you're not sure if you fit into this tiny little box is in direct contrast to the intent of the bill itself.
Correct. Yeah, for sure. Okay, let's put that one to bed real quick. Let's move on to the payroll.
Yeah.
The PPP, right?
Yeah, this one's the one that I think is so interesting to everyone that I'm talking to, because the 7A loan is the way you can somewhat be playing that infinite game from a mindset standpoint that you're borrowing money at a significantly reduced rate today, playing a long game as long as you're wise about it. The payroll protection plan is in order for you to stay alive as a business over the course of the next 75 days. So you would do a look back on the last 12 months of your payroll expenses, your rent, utilities, your mortgages, and a few other operating expenses. Divide that by 12, and then take that would be your monthly average, of course, and then multiply that by 2.5. And that becomes the amount of money that you're in theory qualified to get via this PPP program. And then if you are operating, that money is intended for you to pay your staff and overhead from a minimum viability of overhead.
Right.
And that money, if used for those purposes and substantiated, becomes forgivable or forgiven. And there are a ton of questions surrounding what exactly that forgiveness plan looks like. And there's a lot of misinformation and or misunderstanding, however we look at it.
Right. And that's the one where you have to line up at the bank.
Correct. Yeah, that one is the one where my understanding is LLCs and S corps tomorrow have the ability to apply and obtain that tomorrow, or I guess what will be Friday the 3rd, and
Mhm.
sole proprietors are the following week, they're saying.
Gotcha.
Here's
Now,
what
and
I
again,
found from the CARES Act in general, though, is everyone I've talked to who's attempted to collect one single dollar has been met with massive resistance thus far, and or
Mhm.
use any of the terms within the CARES Act, whether it's forbearance, whether it's 401k rollovers, IRA distributions. Everyone has been met with, I don't know,
Right.
and or I don't have that money, I'm sorry. And
Mhm.
so the sooner and the more repetitive you are to seek it, I think the better off.
Yeah, I mean, I've heard as many as 30 to 40 million people will be in line.
Yeah,
So,
I know, it's insane.
and I was talking with someone today that, again, this is just third party information.
Yep.
Okay, so I just want to disclose that that line will be predicated based on your relationship with the banker. You know, if
Potentially. Yeah.
yeah, if
Yep.
you got a good
Potentially.
relationship with the banker, that's where you're going to fall in line with this. And otherwise,
Yeah.
you're at the back of the line.
Yeah, and that makes sense too, because if you look at it, there's only so much bandwidth for
Mm-hmm.
each banker to do these applications, and they're going to get paid a bump on whatever that line is or whatever the origination is, and it may also your relationship may also determine your approval,
Mm-hmm.
because that's where you're submitting your paperwork. And so to me, this is where it starts to get really fascinating, because there's some ambiguity in the bill itself as it pertains to 1099 contractors, and as it
Right.
pertains to how you calculate what the compensation mechanism is for anyone who earned more than 100,000.
Right.
And so how you are verified on the front end, and then how it is recalculated on the forgiveness side, I think will really hinge on, to your point, that relationship.
Mm-hmm.
So
And
from my framework, I say you go as aggressive as you can on the front end.
right now, let's either dispel or bring truth to this myth. You can actually go to more than one bank. You,
Yeah, it's a,
you can go apply until you can get to a pseudo front of the line.
yeah, that makes sense. That makes sense. I don't know why you couldn't, because it's all it would be paid or verified on your EIN. So there's
Right.
no reason why you couldn't. I guess when I talked with our Chase banker, he had indicated that you had to have had a Chase account open. I think it was
Right.
February 15th or something. So there may be some banks who have their kind of parameters in place, but yeah, I guess to your point, there's no reason why you couldn't.
Well, I was talking with someone that said that they're going to actually open it up to anybody because they want to build relationships.
Yeah, that's smart. Yeah,
You know,
that's really
they want
smart.
to lead generate that way, if you will.
Yeah, and if you were really thinking about how do you get to the front of the line, you'd be strategic in going, okay, well, where would I expect the least amount of fallout is,
Mm-hmm.
banking wise, and go there, right? So that might be 20, 30, 40 miles outside of your metropolitan area to mom and pop community bank where the line's pretty short.
Right. Now, correct me if I'm wrong here. They have to be FDIC
That would
insured,
make sense.
right?
Yeah, yeah,
Yeah, I
that would
think
make
I've seen
sense.
that too. Okay, so that's the payroll protection plan.
What's
And
interesting about that too is that's not based on your credit or your ability or willingness to repay it.
right.
And it's not even personally guaranteed. So when I hear that, as you know, Adam, I like to live in the gray on most everything. And so um, when I hear that, I go, okay, so if you don't re-qualify for the forgiveness portion, what are the negative ramifications? It's not personally guaranteed, and it wasn't based on your ability to repay it.
Right.
What happens if you don't meet the full-time equivalent within the time frame allowed? I don't know, but that
Mm-hmm.
I thought was interesting, and that's what this shows up so many times in the bill, is this kind of repeated theme of the intent is not to scrutinize, in my opinion. The intent is to stimulate GDP.
Right. Yeah. And that's what it's there for. That's almost what they're all there for, correct?
Yeah, absolutely, absolutely.
Mm-hmm.
Yeah, because I mean, there's talk around being, you know, potentially 2 more rounds of funding, but less focused on small business. Like I saw today that Enterprise was positioning for themselves to apply for some of this stimulus.
Right.
I mean, Enterprise is a huge company, and they laid off 90% of their workforce, which would chew up a majority of the available stimulus plan.
Right. Yeah. Yeah. I've heard people predict that this 1 trillion isn't even going to come close to what really is needed. I've heard 5 and 6 trillion.
Yeah, I mean, we're in a really fascinating spot too, because there's some debate that you go for unemployment even right now. I mean, we were running the math that, in fact, I just had a tenant text message me a couple minutes ago that said, "Hey, I lost my job," and they work in the restaurant industry, so I'm sure they did, and so I lost my job. I can't pay, pay the rent. Well, they work in the kitchen side, so they had a salary. My first response was, have you applied for the unemployment benefits that came by way of the CARES Act? Nope. What is that? Okay, great. Well, he actually has the ability to make more money now via the CARES Act for unemployment than he did while in his previous role. So knowledge is incredibly powerful right now, which means from a recruiting standpoint, how you position all of this is you become the thought leader. Right. You have the ability now to make calls, and when you don't make your calls to people that you're looking to get in business with, whether it's small businesses, whether it's real estate agents, whatever that is, if you're not making calls, you're actually doing the world a disservice. Like, understand that you choosing not to pick up the phone and share knowledge is you harming someone else's business. And if that can't motivate you to make the calls, you probably need to look for a different job.
Yep, I agree. There's that equation, everybody. Recruiting equals influence equals leadership. And that's true. I mean, being a thought leader, in my opinion, is putting a couple of things into thought and light there. Because you need to, number one, go educate yourself.
Yeah.
Get educated yourself, and then share that knowledge and share that wisdom, as we talked about at the top of the show, with other people. And to do that, you pick up the phone, you call them, right? You should be calling your database right now. You should be calling everybody to be that value provider. And when I say everybody, we're talking about the real estate space here. You should be recruiting right now, right? You should be hosting a podcast. You should be hosting a Zoom right now for your database, sharing this data. Inside of that Zoom, you should also have, if you are an agent and you like to recruit, or you're building your team or whatever it may be, invite people that are talent-based to that Zoom as well, right? So we can fit this all in there. Go for it.
Yeah, absolutely. Because I've had this conversation with several people around, like, is now the time to recruit or not? And the answer is yes and no, in that you're just changing your message. Right now, the message is you're coming from contribution. And, hey, I want to make sure that your business is positioned to survive where we're going.
Right. Because
right now what I see is there's still a lot of people in this early phase of grieving, in that denial phase, or maybe in that anger phase. And when you're a thought leader, you have the ability to share a thought that is contrary to what is the messaging around them, whatever company they're with right now. Because very few organizations are having this conversation. And so you have the ability to get out in front of it. And when you share without expectation, there is that law of reciprocity that comes back with it.
Right. Yeah, that's good stuff.
There are a number of people who will lose their homes. Like, that's the framework I keep operating from, is if you do nothing, there will be mental, emotional, and economical fallout from it. I don't know to what degree, but what I do know is that recessions create depression, and that depression is within people, and that creates alcoholism, that creates emotional abuse, mental abuse, suicide rates go up, physical abuse rates go up. There's a domino effect of when people lose money and lose hope. And if you can't call right now to share the hope, then this is a challenging business to be in, because never has the job been easier than right now.
Yep. And that's very true. Being that thought leader is where our listeners need to get to and get there fast. All right, my friend, I appreciate all this valuable information, Mr. Thought Leader himself, who's sitting in a closet right now. Hey, where can people go to find more out about Mr. Eric Forney?
Yeah, so Facebook's probably a good place to go. Obviously, you can look just by my name, Eric Forney, and then Instagram, we're at Forney Group, FORNEYGROUP. I will tell you, we have been real slow on social media within the last 3 weeks because the world is rapidly moving, and so posting fuzzy stuff it seems like business for another day. But yeah, we're trying to put out as much value add right now and as much thought as possible. So.
Yep. Well, I know this podcast will go out because it is massive value add in this podcast. Straight from your mouth, my friend. Eric and I have known each other for quite some time. He's also in the group called Mr. GoBundance. He is. And, we've actually had webinars every single night at 7:00 Eastern time that we've been getting on and learning all this information too. So I would say something else to our listeners is go find your tribe, right? Go find your people that you can hang with to learn from. And it's okay to ask questions. It's okay not to know the answers. Get into a room where you are the dumbest person and learn as much as you can from those people is what I would highly, highly, highly recommend.
Man, it's wildly impactful. I mean, like this is what you learn. I mean, we've talked about it before. Is I've been broke, and the way out of being broke is knowledge.
Yeah, and
you only get knowledge by being with more wealth determiners.
Yep. Who's?
Yeah.
We call them who's. Yep, that's true. Well, good. Well, I look forward to being a part of that little series that you're putting together too. That's gonna be fun. Broke to wherever, right?
yeah.
And then broke again.
Hopefully less broke. Yeah, no kidding. No kidding.
Well, everybody, I am your host, Adam Roach. This has been the I Love Recruiting podcast with Mr. Eric Forney from Indianapolis. We will drop this tomorrow morning, 5 a.m. That will be April 3rd. So be on the lookout for this show tomorrow. You can go to Apple iTunes and subscribe and listen every Monday and Friday when we drop these podcasts. And go find Eric Forney, and we will talk to you next time. See you. Bye.
Thanks, Adam.